Silver is once again at the center of the global financial conversation, and what happens over the next few weeks could determine whether the metal begins another powerful rally or enters a deeper period of consolidation. As of today, silver is trading above $58 per ounce, holding near $58.60, despite sharp movements across the US dollar, treasury yields, oil prices, and geopolitical headlines. At first glance, the market appears surprisingly calm, but beneath the surface, several major macroeconomic forces are pulling silver in opposite directions. The temporary pause in the Iran conflict has reduced immediate safe haven demand. Reports of possible progress around the Strait of Hormuz have pushed oil prices lower, and investors are once again shifting their focus back toward the Federal Reserve and upcoming U.S. economic data. The big question now is simple. Is silver preparing for its next breakout, or is the market only catching its breath before another correction? Today, we will separate facts from speculation and examine the latest macroeconomic developments that are shaping silver's next move. Unlike gold, silver occupies a unique position in global financial markets because it serves two important roles at the same time. It is both a precious metal and an industrial commodity. This means silver reacts not only to investor demand for safe haven assets, but also to expectations for manufacturing activity, technology investment, renewable energy expansion, and global economic growth. Nearly half of global silver demand comes from industrial applications, including solar panels, semiconductors, electric vehicles, medical equipment, and advanced electronics. Because of this dual role, silver often experiences larger price swings than gold whenever economic expectations begin changing. Over the past several trading sessions, silver has demonstrated remarkable resilience. Even after geopolitical tensions temporarily eased and some safe haven buying slowed, prices managed to remain above the psychologically important $58 level. This suggests that investors are not rushing to exit the market. Instead, many appear to be waiting for fresh economic data before making larger investment decisions. Holding above an important support zone after a strong rally is often viewed as a sign that buyers continue defending their positions rather than abandoning the market. Another major reason silver remains in focus is the recent movement in oil prices. Reports suggesting that the Strait of Hormuz could reopen helped push crude oil prices lower, reducing immediate fears of supply disruptions. Lower energy prices can ease inflationary pressure because transportation, manufacturing, and production costs become less expensive. If inflation continues moderating, financial markets may eventually expect the Federal Reserve to adopt a less restrictive monetary policy. That possibility is extremely important for precious metals because lower interest rates generally reduce the opportunity cost of holding assets like silver that do not generate interest income. However, the story is far more complicated than simply watching oil prices. The Federal Reserve continues monitoring inflation very carefully, and policymakers remain cautious about declaring victory over rising prices. If inflation remains above the central bank's long-term target, interest rates could stay elevated for longer than many investors currently expect. Higher interest rates usually strengthen the US dollar and increase treasury yields, both of which can create short-term pressure on silver prices. This explains why traders are paying such close attention to every inflation report, employment release, and Federal Reserve communication. One stronger than expected economic report can quickly change expectations for future monetary policy and trigger significant price movements across the precious metals market. At the same time, the U.S. economy continues sending mixed signals. Growth has moderated compared with earlier quarters, but consumer spending remains relatively resilient, and the labor market has not experienced the type of weakness normally associated with a recession. This creates uncertainty because silver benefits from both industrial demand and investment demand. A stronger economy supports industrial consumption, while economic uncertainty increases safe haven buying. In today's market, these two forces are competing with each other, making silver's direction much more difficult to predict than many investors realize. As we move further into this analysis, another important question begins to emerge. If silver continues holding above key support despite easing geopolitical tensions, what is actually driving investor confidence? Is it expectations of future Federal Reserve rate cuts, improving industrial demand, institutional buying, or something much bigger developing behind the scenes? To answer that, we need to examine the bond market, the US dollar, global manufacturing trends, and the positioning of professional investors, because those factors may reveal where silver is truly heading next. As we move beyond the daily headlines, the bigger picture becomes much more interesting. Silver is no longer trading solely on short-term news or technical charts. Instead, it is becoming part of a much larger macroeconomic story involving global investment flows, industrial expansion, monetary policy, and long-term supply dynamics. Professional investors are not asking whether silver can move $1 or $2 in the next few days. They are asking whether the global economy is entering a phase where demand for strategic metals will continue increasing over the next several years. The answer to that question could determine silver's long-term direction far more than any single economic report. One of the strongest arguments supporting silver is the global energy transition. Governments around the world continue investing heavily in renewable energy infrastructure, and silver remains a critical component in high-efficiency solar panels due to its exceptional electrical conductivity. As countries expand clean energy capacity and modernize their power grids, industrial demand for silver is expected to remain an important part of the market. At the same time, electric vehicles, advanced electronics, medical technology, and semiconductor manufacturing all require silver in various applications. This means the metal is supported not only by investor sentiment, but also by real industrial consumption, giving it a broader demand base than many other precious metals. Supply, however, tells a different story. Global silver production has not increased at the same pace as long-term demand expectations. Developing new mining projects often requires years of exploration, environmental approvals, financing, and construction before meaningful production begins. Many silver mines also produce the metal as a byproduct of lead, zinc, copper, or gold mining, meaning silver supply is not always able to respond quickly to rising prices. This creates the possibility of tighter market conditions if industrial demand continues growing while mine production remains relatively constrained. Although temporary surpluses and deficits can occur, the long-term balance between supply and demand remains one of the most closely watched fundamentals in the silver market. Institutional investors are also paying close attention to silver because portfolio diversification has become increasingly important in today's uncertain financial environment. Inflation may have moderated from previous highs, but concerns about government debt, fiscal deficits, geopolitical risks, and long-term currency stability have not disappeared. During periods of elevated uncertainty, many portfolio managers increase exposure to precious metals as part of a broader risk management strategy. Gold usually receives the first wave of safe haven buying, but once confidence in the precious metals sector improves, silver often attracts additional investment because of its smaller market size and greater upside potential. Another important indicator is the futures market. Large institutional traders closely monitor futures positioning because changes in open interest and trading volume can provide clues about market sentiment. Rising prices accompanied by increasing participation generally suggest growing investor confidence, while falling participation during a rally may indicate weaker conviction. Although short-term futures positioning changes frequently, professional analysts always combine these signals with macroeconomic fundamentals rather than relying on technical indicators alone. That balanced approach provides a more complete understanding of where the market may be heading. The relationship between silver and inflation expectations also deserves attention. Historically, silver has often performed well during periods when investors anticipate easier monetary policy, combined with improving industrial activity. If inflation gradually moves toward the Federal Reserve's target, while economic growth remains stable enough to support manufacturing demand, silver could benefit from both lower real interest rates and stronger industrial consumption. This combination has historically created favorable conditions for the metal. However, if inflation unexpectedly accelerates again and forces the Federal Reserve to maintain restrictive policy for longer, short-term volatility is likely to remain elevated. When all these factors are viewed together, the current silver market appears to be building a foundation rather than showing signs of exhaustion. Prices have remained resilient despite changing geopolitical headlines, elevated treasury yields, and ongoing uncertainty surrounding Federal Reserve policy. That resilience suggests investors continue recognizing silver's long-term strategic value. But the market still needs a decisive catalyst to begin its next sustained move. Whether that catalyst comes from softer inflation, a shift in Federal Reserve policy, stronger industrial demand, or renewed geopolitical uncertainty will become clearer in the coming weeks. And that is exactly where the next stage of our analysis begins, because understanding those future catalysts may provide the clearest roadmap yet for where silver could be heading through the remainder of this macroeconomic cycle. The next phase for silver will likely be determined by a combination of monetary policy, economic growth, and investor psychology. Unlike many markets where one major factor dominates price movements, silver responds to several forces simultaneously. This makes it one of the most complex assets to analyze. A weaker dollar alone may not guarantee a rally if industrial demand is falling. Strong manufacturing data may not be enough if interest rates remain too high. Geopolitical uncertainty may provide temporary support, but long-term trends require deeper economic forces. Understanding this balance is essential for anyone trying to evaluate silver's future direction. One of the most important upcoming drivers will be the Federal Reserve's policy path. For much of the previous cycle, interest rates remained elevated as policymakers attempted to control inflation. Higher rates successfully slowed parts of the economy, but they also increased borrowing costs for households and businesses. If inflation continues cooling and economic growth gradually loses momentum, markets may begin anticipating a more supportive monetary environment. Historically, periods when investors expect lower interest rates have often benefited precious metals because declining yields reduce the relative attractiveness of interest-paying assets. For silver, this could become an important catalyst because it would strengthen both investment demand and broader commodity sentiment. However, investors should also understand that the Federal Reserve does not make decisions based only on market expectations. Policymakers remain focused on employment, inflation, and financial stability. If inflation proves more persistent than expected, the central bank may continue maintaining restrictive policy. In that environment, silver could face periods of pressure as the US dollar and Treasury yields remain supported. This is why upcoming inflation data and labor market reports will be closely watched by traders. These reports will help determine whether the next major move in silver is likely to be driven by monetary easing expectations or continued policy caution. Another major factor is global economic growth. Because silver has significant industrial applications, the health of manufacturing activity is extremely important. China, the world's largest manufacturing economy and a major consumer of industrial metals, plays a particularly important role. If Chinese industrial activity improves, demand for silver could receive additional support. Likewise, stronger global electronics production, renewable energy investment, and infrastructure spending could create additional demand pressure. On the other hand, a global manufacturing slowdown could temporarily reduce industrial demand and limit silver's upside. The energy market is also connected to silver's outlook in an indirect but important way. Oil prices influence inflation expectations, production costs, and overall market sentiment. Recent reports about possible easing around the Strait of Hormuz helped push energy prices lower, reducing immediate fears of supply disruption. Lower energy costs can support consumers and businesses by reducing operating expenses. However, if geopolitical tensions return and energy markets become unstable again, investors may once more seek protection through precious metals. This creates a constant balancing act between economic stability and geopolitical risk. From a technical perspective, silver's ability to remain above the $58 per ounce region is an important signal. Strong support levels often represent areas where long-term investors step in and defend positions. A sustained move above major resistance zones could attract momentum traders and institutional investors looking for confirmation of a new bullish trend. However, sharp rallies without fundamental support can quickly reverse, which is why professional investors combine technical analysis with macroeconomic research. Looking at the broader picture, silver appears to be entering a period where patience may become more valuable than prediction. The market has already experienced significant movement, and the next major trend will likely require confirmation from economic data, monetary policy changes, and global demand conditions. Investors should watch several key signals: the direction of real interest rates, movements in the US dollar, Federal Reserve communication, industrial production trends, and changes in global geopolitical risk. The most interesting part of this cycle is that silver is supported by both defensive and growth-related factors. It can benefit when investors seek protection from uncertainty, but it can also benefit when technological expansion and industrial demand accelerate. Few assets have this combination. However, this advantage also comes with volatility because silver must constantly balance competing forces. In the final part, we will bring everything together and examine the possible scenarios for silver, the key price drivers investors should monitor, and the long-term outlook that could shape the next major move in the precious metals market. The future direction of silver will ultimately depend on how several major economic forces develop over the coming months. At this stage, the market is positioned between two powerful narratives. The first narrative suggests that silver is entering a new long-term expansion phase, supported by industrial demand, supply limitations, geopolitical uncertainty, and the possibility of easier monetary policy. The second narrative warns that high interest rates, a strong US dollar, and slower global growth could create additional pressure before the next major advance begins. The reality is that both possibilities exist, and successful investors understand the importance of preparing for different scenarios rather than relying on only one outcome. The bullish case for silver begins with the structural demand story. The world is becoming increasingly dependent on technologies that require advanced materials, and silver remains one of the most important metals for electrical conductivity and industrial efficiency. Solar energy expansion, electric vehicles, artificial intelligence infrastructure, electronics, and modern communication systems all require significant amounts of silver. Unlike some commodities where demand depends heavily on one industry, silver benefits from multiple areas of economic development. If global investment in technology and renewable energy continues expanding, long-term demand could remain a powerful support factor. The supply side also deserves attention. Silver production growth has struggled to keep pace with rising demand expectations because new mining projects require significant time and capital. Environmental regulations, higher production costs, and declining ore quality in some mining regions create additional challenges for producers. If demand continues increasing while supply growth remains limited, the market could experience periods of tighter availability. Historically, periods of supply pressure have often created stronger price movements when investment demand also increases. However, investors must also consider the risks. If inflation remains persistent and the Federal Reserve keeps interest rates elevated for longer, the US dollar could remain strong, and Treasury yields could continue attracting capital. That environment may limit silver's short-term upside. Additionally, if global manufacturing activity weakens significantly, industrial demand could slow, creating temporary pressure on prices. Silver is a high-volatility asset, meaning investors should expect larger price movements in both directions, compared with gold. The relationship between silver and gold will also remain important. Gold often acts as the leader of the precious metals sector, especially during periods of financial uncertainty. Silver frequently follows gold but can outperform when economic conditions improve and industrial demand strengthens. If the gold market continues attracting institutional and central bank demand while silver maintains strong industrial fundamentals, the entire precious metals sector could benefit from a broader investment cycle. For investors watching the next major move, several indicators will be extremely important. Watch the Federal Reserve's interest rate decisions because monetary policy directly affects precious metals. Monitor U.S. inflation data because it influences expectations for future rate cuts. Follow Treasury yields and the U.S. dollar because they determine financial conditions globally. Pay attention to manufacturing data and renewable energy investment because they reveal the strength of silver's industrial demand. Finally, continue watching geopolitical developments because uncertainty often creates additional demand for hard assets. The current silver market is not simply about predicting whether the price will rise or fall tomorrow. It is about understanding a much larger transformation taking place across the global economy. The combination of changing monetary policy, rising technology demand, supply challenges, and shifting investor behavior creates a unique environment for silver. While short-term volatility is likely to continue, the long-term story remains closely connected to real-world demand and global financial conditions. If you are following silver, gold, and the broader macroeconomic picture, remember that markets rarely move in a straight line. Strong trends often experience corrections, and periods of uncertainty often create opportunities for investors who remain patient and disciplined. The most important advantage any investor can have is knowledge, preparation, and the ability to separate emotional headlines from fundamental economic data. Thank you for watching Macro Bullion. If you found this analysis valuable, subscribe to the channel and share your opinion in the comments. Do you believe silver is preparing for its next major breakout, or do you expect more consolidation before the next big move? Your perspective matters, and the discussion helps us understand how investors are viewing this historic market environment. DYOR, do your own research. This content is created for educational and informational purposes only and does not represent financial, investment, or trading advice. Market prices, economic data, and forecasts can change quickly based on new information, including Federal Reserve decisions, geopolitical developments, and global market conditions. Always verify the latest silver prices, economic reports, and market information before making any financial decisions. Conduct your own research, understand the risks involved, and consult with a qualified financial professional if you need personalized investment guidance. All investments involve risk, including the possible loss of capital.